China's economy has been having some trouble recently. One reason why is that they're being impacted by the trade war, but I'm not entirely sure what the other reasons why their economy is having trouble. I know they have a big real estate bubble, and when that bursts or deflates, it's going to have a big impact on consumers, who put large portions of their savings there. Prices in parts of China are way higher than makes sense, and all bubbles burst or deflate because there isn't infinite money. For prices to rise, they have to keep finding new buyers, and when you eventually run out of new buyers because there are only so many people, prices can't rise any further. Once prices finally stop rising, they fall because a good portion of buyers were speculators who were only buying on the expectation that prices would rise further. That's why China can't escape the fact that their bubble will have consequences. They have taken certain measures that probably protect their financial system from the full impact of a real estate bubble, like minimum down payments. So falling property prices won't lead to any big financial crisis, though the shadow banking system might be hit hard. I don't think the bubble has burst yet, though. Anyway, let's read the article about the latest bad news from China. China's factory prices fall faster as weak demand hits economy. Beijing. The prices Chinese firms pay factories for their goods fell last month at the fastest pace in 3 years, as sickening demand and bursting drag in the economy. Consumer prices were also broadly subdued and only supported by a surge of almost 50% in the price of pork, caused by African swine fever that has ravaged the country's pig population. The Producer Price Index, a purported barometer of the industrial sector that measures the cost of goods at the factory gate, dropped 0.8% on year in August, following a 0.3% drop in July. A slowdown in factory gate inflation reflects sluggish demand, while a return to deflation could dent corporate profits and drag the world's number 2 economy, which in turn could lead to a drop in prices globally. While the figure from the National Bureau of Statistics marked the second consecutive month of decline, it is slightly better than the 0.9 fall forecast in Bloomberg News survey. Last month was the first time the PPI had fallen into negative territory since August 2016. Petroleum and gas mining, and coal and other fuel processing sectors, led to drop. NBS official Xuan Yun said in a statement indicating the weakness in manufacturing. However, Consumer Price Index, a gauge of retail inflation, rose 2.8% last month, stabilizing from July and being forecast. But while meat and egg prices rose, as traditional Chinese mid-autumn festival approaches, pork was the key driver, shooting up 46.7% on year. The country's pig industry has taken a heavy hit. Julian Evans Pritchard of Capital Economics said that further easing measures are likely as pressure in demand and factory gate deflation deepens. Weakening demand dragged producer price inflation further into negative territory last month, while surging pork prices kept consumer price inflation elevated. With demand-side pressures on prices increasingly subdued, we think that further monetary easing is on the horizon. The People's Bank of China on Friday said it would cut the amount of cash lenders must keep in reserve, saying it would help release more than $100 billion into the sterling economy. China also confirmed last week that a new round of trade talks will be held in Washington in early October, in an attempt to patch up the trade tensions between the world's 2 biggest economies. Well, if inflation's only being kept up because of a temporary crisis in pork production pushing up food prices, and producer prices are outright declining, then that really means that demand is declining, and that really means the economy is doing pretty badly. I guess China really is having economic difficulty now. Alright, now that I've looked at China's actual producer price index over time, it doesn't seem nearly as bad. I mean, prices are declining a little bit, but they declined for way more for a long period pretty recently. And during that time, China's economy was doing pretty well. So I guess this indicator doesn't mean too much in and of itself. The news from China's economy is doing pretty bad, but again, I don't think China's producer price index being a little negative means too much after all. Let's just see how China's consumer price index is doing. Let's make it go back 10 years. Column. It's been about a steady 2-3%. Not really that big of a deal. And it's not doing that much different from what it's been doing recently. Okay, let's see if core consumer prices have been any different. No, core consumer prices have been pretty much increasing by about 1.5%, and it's not doing anything too different from what it's been doing. So if there is bad news from China's economy, then the price index aren't going to be the indicators that are showing it. Please share this video, like, leave your thoughts in the comment, subscribe, and hit the notification bell.